Good day, everyone. Welcome to our Aussie Equities Day hosted by Spark Plus. If it's your first time joining us, my name is Tim. It's good to have you. And I'm excited to be showing you some excellent companies listed on the ASX today. You can expect a total of 10 companies to present, ranging from pharmaceuticals to resource explorers and producers, HR management, SaaS plays, an education provider, and even a contact lens manufacturer. Now, before we begin, the format of today's webinar will be a 10-minute pitch by each company, followed by 5 minutes of Q&A from the audience. That's you. So make sure to send in your questions via the Q&A function and we'll have them answered live on stream. Up next, we have RareX. Their ticker on the ASX is REE. And today we have Jeremy Robinson, their executive director. Something that RareX has going for it is that rare earth prices have really been trending upwards because of this trade war with China. They also have a rare earth asset and a very lucrative copper gold asset in the Lachlan Fold Basin of New South Wales. So Jeremy, tell us more about RareX.
Yep. Look, thanks for the introduction, Tim, and thanks to Spark Plus for hosting us. It's been an exciting time for us in the rare earth business. We're finally getting a day in the sun as we see it, and long may it last. So I'll run through the presentation very quickly with you now.
Thank you.
As I mentioned, RareX is a rare earth company. We're very much focused on our activities at Cummins Range and also a couple of exciting greenfields rare earth players, which are just about to start drilling in the coming days. I'll also touch on our copper gold joint venture we have with our very competent partners in Kincora Copper in the Lachlan Fold Belt. So investment overview, this is where we're located. We entirely focus on Australia, which has been a very attractive place to operate in these rather unusual times this year. We've been able to get on with our projects, even projects in other states. It's been hard to get across state borders in Australia. So been very, very thankful to be in Western Australia. We have a JORC resource at Cummins Range, 13 million tonnes at 1.3% TREO, with a very attractive neodymium praseodymium content as well. The drilling we've recently done has been very successful in delineating a high-grade portion to the resource, which was the objective of the drilling, and we've been pleasantly surprised with some of the drill holes we've got out of that program, and I'll run you through the sections later on. As mentioned earlier, we have our exposure to the Lachlan Fold Belt with a 35% free carry and some very exciting drilling going on there. Made a release this morning following up on some drilling done by Kincora, and I'll show you the results of that shortly. So as our corporate snapshot, recently completed a modest capital raise at 10 cents. So we now have 408 million shares on issue at 13.5 cents. Just over 50 mil market cap, well funded with $5 million in cash and about 1.5 million in Kincora equity. So still a modest EV for a well-growing company. We see ourselves catching up the other rare earth contenders, lots of Hastings and Arafura. They're all 100 to 150 million. So still a lot of upside in that market cap for us. Board and management, we've put a bit of time into refreshing this with some industrial minerals experience, which is hard to find. John Young was a founder of Pilbara Minerals, very successful spodumene producer in Western Australia. And also Cameron Henry, who is the founder and managing director of Primero Group. It has a lot of experience in building industrial mineral plants, both rare earths, lithium, spodumene, etc. And his company has just been taken over by NRW, the large mining contractor here in Australia. So rare earth elements, what are they? Apologies if you know all this, but loosely, well, not loosely, entirely a group of 17 elements grouped into light rare earths, specifically neodymium, praseodymium, and the heavy rare earths, dysprosium and terbium. They're the main ones you want for these rare earth permanent magnets. So it's really the end use in rare earth permanent magnets which makes these minerals attractive. They have special magnetic properties which can't be replicated by any other minerals. So very much growing demand. It's part of the story of this decade with EVs, renewables, etc. So that's just what I was talking about. The rare earth permanent magnets, the main two uses are 1, electric vehicles, and 2, renewable energy, wind turbines, specifically focusing on offshore wind. Offshore wind's a massively growing industry. We see a lot of opposition to onshore wind farms, primarily due to the the optical look of them. People don't like them in their backyard, so we're moving to an offshore wind farm model. And you want rare earth permanent magnets in these because they're much more reliable. You don't need to service them as much, and they're much more efficient as well. So you don't want to be lugging great big wind turbines that aren't efficient out into the middle of the ocean. You want very efficient rare earth permanent magnet driven wind turbines. So we see both these markets for EVs and wind turbines growing with very strong compound growth rates, somewhere towards 10% for both sectors throughout this decade and beyond. So you have the fundamental demands of rare earths. You overlay that with some geopolitical risk and you've got a pretty attractive sector. And that's probably why you've seen the price jump up quite sharply in the last month. Both the price of NdPr is up some 40% in the month of November alone. It's come off about $40 to about $65 a kilo. But that's still way short of what it can do. Last time we saw a full-blown trade dispute, it got to $280 a kilo. So we're very much watching the price. A lot of the premium forecasters are predicting a long-term price around $110 a kilo, which is far in advance of where we think we can produce NdPr from. So our asset, this is probably why you're investing in the company. Cummins Range is our main project. It's located in the Kimberley region of Western Australia, just near the town of Halls Creek off the Tanami track. Well provisioned for infrastructure. You've got Kununurra, Wyndham in the north, Broome to the west, and the Port of Darwin as well is a growing industrial hub as well, which is not too far away. So there's nothing that can't be built in that part of the world. You've had various other mines, the Pantoro mine, the nickel mine as well of Savannah. So a very good place to develop a mine, Western Australia being the #1 mining jurisdiction in the world. So our resource at Cummins Range, this is a resource we inherited from the previous operators, 30 million tonne at 1.13% TREO, with a very attractive NdPr content of 22%. That compares well to the likes of Mount Weld at 24%, and also very low thorium, 50 ppm, which makes it an attractive product. The geology of our deposit is a weathered carbonatite, the same as Mount Weld, very easy free dig sort of ore from surface, low strip ratio. And what we've been doing for the last 3-4 months is we've been out there drilling, tightening up, looking to convert some of the inferred to indicated and define a high-grade portion of the resource. And you'll see the next few slides, we've been very successful in doing that. So this is some of the results we've put out over the course of the last month and a half. Very broad, high-grade intercepts, 36 metres at 4.6, 41 metres at 4% there, and also some attendant niobium oxide, which will add to the economics of the project. We shouldn't be surprised to see niobium in a weathered carbonatite. It's generally there and it's generally recovered as well. And so next section over, this is another 40 to 60 metres long strike, very attractive intercept again, 90 metres at 3.8% TREO in the same sort of weathered channel. Next slide over, this is the one that really got me excited, 109 metres at 3.6, including 70 at 5.4. And within those, you get some ultra high grade, sort of plus 10% stuff, which, those sort of numbers aren't out of place at Mount Weld. So we're very excited by that. We look forward to updating the resource next year and focusing on a high-grade portion of the resource, which will inform our scoping study and PFS to be completed by the middle of the next year. So what we're trying to do different that a lot of the other rare earth producers have sort of almost tripped up on a number of times. We're not going the full cracking and leaching circuit on site. We're going to produce a monazite rare earth concentrate and sell it into existing capacity. Historically, that's all been present in China, but we're seeing more and more capacity built in the West. Lynas building a facility in Kalgoorlie, which we think we may get access to on commercial terms at some point down the line. And we'll also look at getting together with other rare earth producers in Australia to see if there's some common sort of infrastructure we can build. So it's a low capex strategy. It's something a small company can take on. It's not the $1.5 billion capital, which makes a lot of these projects quite unattractive. This is our Greenfields exploration side of our business, Weld North, a project we bought into the company. We pegged the ground, it was vacant ground. It has the same geophysical signature as Mount Weld itself, located 80 kilometres to the north of that project. And we've been just reviewing it geophysically, and now we're about to see have a look at what's underneath the sand. We've got the crews mobilised today, and I'll be drilling by Thursday afternoon. Any sort of success there would be hugely accretive to our share price. It could really take off if we get onto something here. And we hope to continue to generate projects like this and test them. This is what people want us to do, and this is what we'll continue to do. So to the other side of our business, just quickly, we had some legacy copper gold assets in the New South Wales Lock and Fold Belt. It was in the shell company when I got here with the rare earth asset. We went and attracted a very competent joint venture partner in Kincora Copper, led by John Holliday, who's the principal discoverer of Cadia. They've had some encouragement to date, including some very good broad skarn intercepts, both at Trundle Park and Mordialloc. So this is where it sits. It sits to the west of the North Parkes mine, owned by Sumitomo and China Molybdenum Corp, Australia's second largest copper gold porphyry mine. And it's interpreted to be the same geology, the same intrusive setting. So they've drilled about 10 holes to date. We've got assays back from 7 of them. This is 2 of the, 7 of them. 7 still in the lab, that's why 8's the 7th. Some pretty attractive widths and grades from close to surface, 51 metres at 1.2 and 0.6 copper, and just released today, 90 metres at 0.65 gold and 0.2 copper. So we think we're in a very big system. It's just about nailing the porphyry at depth now. I have faith in the team at Kincora to find it if it's there. It's expensive exploration, so I'm glad we're not paying for it, but very happy to be exposed to it for our shareholders' sake. Orange East, this is a project we have 100% in the Lachlan Fold Belt. It was handed back to us by Alkane recently. It's the same geology as the McPhillamys deposit, same radiometric signature. We're just approaching landholders at the moment, and we think we'll be out there drilling, testing that in the new year. So another exciting project. A gold-only project, sits a bit different from our rare earth strategy, but we'll test it nonetheless. So just quickly, in summary, we're a rare earth company. We've had significant success at the Cummins Range project that will form our pre-feasibility study next year. We continue to look for the elephant. Another Mount Weld would be nice. So we're having a lash at one of those over the coming weeks. And we contain significant exposure to copper gold exploration success in the Lachlan Fold Belt. So with a market cap of 50 million, I think there's a long way to go. And for our shareholders, I can see a plus $100 million in the new year if we tick a few more of these boxes off. So thanks very much. Open for questions. Hopefully it didn't take too long there.
Yeah, that's fine, Jeremy. Thank you for that. We had a question come in. With rare earth prices, I guess, going up, do you see any potential competitors coming in? And I guess, what are the sort of barriers to entry for these new players? Can you talk a little bit more about that?
Look, there's always risk of other people making new discoveries, but there's nothing we can do about that. There's a limited supply of quality projects around. We moved ahead of a lot of the pack in the middle of last year, so we think we've got our foot on a very good project. Look, we're happy with where we're positioned. We also continue to assess other projects, so we're very much aware of what's out there, and at the moment I've had nothing come across my desk that beats what we're trying to do at Cummins Range.
Okay. Yeah, and maybe we can get your take on this business with China. How do you see that impacting the sector in the long term?
That depends what you mean by this business with China.
The trade war
obviously there's been a bit of tension between Australia and China recently, and also there's been ongoing tension between China and the West in general. It's affecting a lot of industries in Australia. It's very much one to watch. It does play to the need for supply chains outside of China, and it's very much, people are very, very aware of that in the rare earth space, and you're seeing governments step in to try and facilitate that, both our own government in Australia with the Critical Minerals Facilitation Office, and also various departments in the US as well. So, it's highlighting the need to get away from single source supply chains, and that's our government's helping us to do, and we intend to help them with that.
Excellent. We had another question come through, bit of a cheeky one, I guess. How long will the existing cash last the exploration? I mean, given the current burn rate, if you don't take up any additional huge projects.
Yeah, look, we don't need to spend a lot. We've done most of our drilling. I think we'll probably spend another 2 million at Cummins Range next year. Our drilling at Mount Weld this month will only cost $100,000. So we have no need to go hard at spend in the short term. So look, most of next year would be the answer to that.
All right. No, thanks for that, Jeremy. Definitely appreciate the insight. We're going to move on now to Technology Metals Australia. But thanks for that, Jeremy.
No problem. Thanks for having us.
Yep. So TMT, we've got Ian Prentice, Managing Director of Technology Metals Australia. They have a vanadium and magnetite resources in Western Australia. They've also recently acquired an iron ore asset, which through a partnership with Sino Steel, which is very exciting. Ian.
Hello, thank you, Tim.
Correct. Ian is joining us today. Go for it, Ian.
Fantastic, excellent. Thanks for the intro, and thanks for putting on today's event. So as you mentioned, so we've got a vanadium project and an emerging magnetite vanadium project in the Midwest of Western Australia. So Technology Metals listed on these assets up near Meekatharra in the Midwest of Western Australia, focused on the Gabonintha vanadium project, and in more recent times we've moved a little bit across to what we're now referring to as our Yarrabubba project, and the slide here talks about, I guess that strategy that we're moving forward on is how the Yarrabubba project is a step change for the Gabonintha vanadium project, and as I'll talk about through the presentation, it really is the breakthrough that we've been looking for as a way to stage the development of the much larger long life vanadium project, and Yarrabubba is a real key for that as we move forward. So just our obligatory disclaimer. Corporate overview, pretty consistent board and management team over the last few years, and equally our collection of consultants that have been supporting us through a series of studies that we've completed on Gabonintha and now working with us on progressing the Yarrabubba project. We've just completed a placement, so I think settlement is going out today. So we raised $8 million through a placement at 35 cents. So the corporate overview there shows our current cash position. We do actually have a share purchase plan which is live at the moment, closes next Friday. Looking to raise maximum $2 million in that share purchase plan, but obviously that's sitting at in excess of $9 million at cash at bank at the moment is a very strong position for us to progress our project. And now we've moved up to 147 million shares on issue thereabouts, and a 50 million market cap as of yesterday. Where we are, we've already touched on that a little bit. Fantastic location from logistics point of view, right next to the main northern highway that goes up into the Pilbara region, into the iron ore district. So good access back either to the port of Geraldton or down to the port of Fremantle at Perth. So both bringing in equipment and consumables, but also for export markets, really good access through those ports. Our mining leases are granted, which has been a big achievement for us this year to get those granted and to enable us to now move forward into the next phases. Talk about our water supply. So again, a key item for any of these operations is making sure you've got your water supply secured, and that's all been done. The last couple of points there, we've been identified as a regionally and nationally significant project in Australia. So we have lead agency support from the West Australian government, and so particularly coming out of COVID, looking for significant projects to develop and employ people and I guess construction phases. So it's a really good tick in the box there for having that support from government. But the last point is really the key for us now. We've got this ability now with Yarrabubba where we can do a staged development for the overall project, a much longer life project with the vanadium project, but Yarrabubba enables us to step through that with I guess, minimal dilution for our shareholders, and maximising the benefits for all our stakeholders. So just moving into Yarrabubba itself, we've put out a few news releases over the last month or so around what we're seeing down there. But really, it is a much lower cost entry point for us to develop the whole project for the Gabanintha area. It's going to be for Yarrabubba. It's a pretty straightforward open pit mining process, and then just a crushing and milling, and then a magnetic beneficiation to produce a magnetic concentrate. So that's our product that we'll be sending off to market. The concept is that we'll be building that circuit up at Gabanintha. So it'll be effectively the front end of our Gabanintha processing circuit will be the entire processing circuit for Yarrabubba. So we're really pre-investing into the Gabanintha vanadium project by building the processing circuit for Yarrabubba. I guess that whole development is really well supported by all the feasibility study work we've already completed for Gabanintha. So things like water and tailings and all the supporting infrastructure, that's been included in a study completed last year. So we've got all that detail already there. So now it's really just focusing in on the Yarrabubba project itself from a technical point of view, looking at the flow sheet and design and moving through. And then we talk about reserves and resources down at Yarrabubba. Without sort of jumping too far ahead, but that mineral resource of about 28 million tonnes, we don't expect that to dramatically increase over time. But what that does do is gives us, we feel probably something around about a 6 or 7 year mine life at Yarrabubba. So I think over the next little while, as we get more work behind us and progress our studies, we'll be able to demonstrate some really significant cash flow over those years, which will then, as I say, really be the catalyst for progressing the Gabanintha project. So just to put that into context as far as where the circuit sits, we put in the red outline there. So what this slide shows is the full Gabanintha processing flow sheet. So from the mining from the ore all the way through to final vanadium pentoxide product. So that's what ultimately we're going to build for Gabanintha. In the short term for Yarrabubba, the bit in the red square is what we'll need. So effectively we build that section, which is around about a third of the plant. We build that for Yarrabubba, and then once we've moved through the Yarrabubba and we're ready to develop Gabanintha, that circuit's already in place. So pre-investment into that Gabanintha flow sheet. So the product that we're looking to produce. So we've done quite a bit of work so far, and we're moving forward on more test work. We're actually drilling there at the moment to get some more sample for pilot scale test work on the flow sheet for Yarrabubba. But what we're looking at is a very high grade magnetite concentrate. So we're looking 65% iron, and also very high vanadium content. So 1.7%, so 1.6, 1.7% vanadium in our concentrate. So a very high quality, high value product, which we think is going to have a lot of benefits for the right steel mills that can use this, and a really high value and use for this particular product. That weight recovery is really important. The third bullet point, we get about 50% of our ore actually reports through to the final concentrate. For a magnetite deposit, that's a very high number. So it means that we can really maximize maximize the resource. So equally, very low deleterious elements. So it's a very clean concentrate, very clean iron product. And again, that's a really big tick as far as customer engagement. And then the last bullet point is something we've been working on and we've been alluding to a little bit. We believe there's going to be some products that we can get out of our tails stream. So the non-magnetic component from this process, we believe there's going to be some material that we can recover from that and add additional revenue streams to the overall project, and really, I guess, demonstrate a very, very robust financial opportunity there. So as you mentioned earlier, Tim, we do have a LOI with Sinosteel Australia. So looking at offtake for the Yarrabubba product. So this is only focused on Yarrabubba. So it's the life of mine on the iron vanadium product. And we're talking around 1.5 million tonnes per annum under that agreement. And some pricing structures there. As I say, it's a very high quality, high purity product. And so we expect to get a premium pricing for that product. Also, part of the deal with that Sinosteel Australia LOI is engaging with their sister company out of China around an EPC contract and looking at building it. And one of the key advantages, I guess, two key advantages for Sinosteel, that they know the market very, very well as far as the magnetite and who's going to be able to benefit the most from this very high purity product, but also they know processing of magnetite. So they're going to be able to add a lot of value as we move through the engineering side of the whole process. So Jumping through now just to Gabonintha, there's a couple of slides we can quickly talk about on the actual Gabonintha project. It's currently a long life mine, 16 years, so that goes on the sort of effectively add that to the Yarrabubba. So we're looking at a plus 25-year type of mine life over the combined operations as it stands at the moment. Very, very high grade, high purity product, a large production profile. Got some real key benefits in our ore profile, very low oxidation, which gives us a fantastic benefit in processing and keeping our costs, both capital and operating costs, down. But also there's a lot of potential to expand on that reserve. So we think once we're up and running that we'll comfortably exceed 20-25 years of mining at Gabonintha. Key part of the whole feasibility study we did for Gabonintha was running some pilot test work. As I say, we're collecting some sample now to do pilot test work for the Yarrabubba project, but we did this higher level of work for the vanadium project, and that's really de-risked the whole project. So demonstrated all the operating metrics and confirmed high recoveries and all those really key things at a continuous processing level at a larger scale. So really, really important on de-risking these types of operations. Ultimately, we've got a very, very high purity vanadium product. We've currently got some offtakes in place around the vanadium. So I mentioned earlier, we've got Sinosteel Australia engaged around offtake on the iron vanadium product out of Yarrabubba. We've also got a series of offtake agreements in place around the vanadium product. We'd be looking at producing something close to 99.5% purity V2O5, so very, very attractive vanadium product. And so that's certainly got some interest from customers, both in the steel industry, but also in the vanadium redox flow battery space, which is, I guess, a key emerging market for vanadium. So right now, as I say, we've completed a capital raise with the placement of $8 million coming in, and really that is going to fund us through all of our activities next year. And the focus, as I say, is really moving Yarrabubba through to a development decision. There's a lot of words on this slide about all of that, but really just stepping through all the activities we need to go from where we are today to completing a feasibility study on Yarrabubba, getting all our approvals in place, and being in a position to make a decision on developing the project in Q4 next year. So effectively within 12 months time, we will have a project that has been given the green light to move into that construction phase. So some other points there about who we've engaged with. I mentioned earlier the WA government-led agency, but also we've got a lot of engagement with NAIF, which is the federal government, I guess, funding agency for operations in infrastructure in the north of Australia. So a really key part of our equation for funding all of our projects. And yeah, just to wrap that all up, I think we're very much leveraged to what we see as a premium mine product, but also key for long term that there is a lot of change happening in the vanadium industry, and we're perfectly placed to take advantage of that with a project that we can step through from stage 1 to stage 2 and be a significant vanadium producer long term. We're delivering on the offtakes and delivering on project deliveries. Very, very significant projects. As I say, the vanadium project is going to be one of the largest producers in the world at a very low cost profile. Great environment here in WA for building and operating mining, and I think that's really come to the fore during COVID. Demonstrated that the Australian mining industry is very, very resilient, and I guess the key part at the bottom there, we certainly have the team in place to progress all the way through to production over the next little while and maximise our shareholder value. So that's the technology metal story in a reasonably quick time frame. Thank you very much. I guess open for questions.
Yeah, thanks, Ian. So we had a question come through. What does the deal with Sinosteel sort of mean for TMT? I think you briefly touched on that already, but can you tell us more about how how you guys were introduced and how that partnership sort of happened?
Sure, absolutely. So we've been talking to Sinosteel here in Australia for over 12 months. We started talking to them, end of last year around the vanadium project, talking around offtake and EPC on the vanadium project. And we've had ongoing dialogue, and they've been in the data room and assessing the project. And then really, as Yarrabubba emerged as a unique opportunity to design vanadium product, we've sort of re-engaged, and that's where the conversation moved on. And they were very quick to move into some more formal arrangements around that, based on the quality of that product of Yarrabubba.
Good. And another question here, unrelated, is what is your runway looking like now that you've done your recent capital raising? How long till you need to raise more cash? I guess wrapped up in this question is also, you're going to be ramping up sort of exploration and production in any way, or increasing your cash burn, and then how long is that going to last you?
So look, the idea of this capital raise was to make sure that we were fully funded all the way through to completion of the study for Yarra Bubba, and that's been achieved. So I think we've got plenty of runway to get all that work done. As you know, we're in a drilling phase right now. We'll do a little bit more drilling in the first quarter of next year around the resource reserve estimation work at Yarra Bubba. But that's really the last of the drilling we'll be doing from a resource point of view. So yeah, certainly funded all the way through to completion of the Yarra Bubba study and a development decision. So it'll be the funding. Next round of funding will be to build the project.
Excellent. Okay, and in terms of your estimates, when in the next, you had a timeline before. If we can just go back to that.
There we go. So that's effectively next calendar year. So all those things happening, and with the aim of having our feasibility study on Yarra Bubba completed towards the end of Q3 next year, and then that'll be the point of making the decision around development.
Okay. Yeah. So if everything goes well, we can expect to see you another one of our webinars sometime next year. This time then.
Absolutely.
Someone came in to ask, interested in the trend in pricing for vanadium, and the supply demand balance. I guess more about the macroeconomics of vanadium.
Yeah, so it's been an interesting year, clearly, for all of us across a lot of areas with COVID, and I think the vanadium market is certainly been subject to that. So the vast majority of vanadium is produced and consumed in China, but the balance is moved to a point where China are pretty well consuming everything they produce and have very limited ability to export. So that market is very, very tight. But what we've seen due to COVID is that the North American and European consumers, which are the second and third largest consumers of vanadium, have really been sitting on the sidelines. They've been, industrial production has been impacted dramatically through the economic impact of COVID. So what we're seeing at the moment, I think, is we're seeing a bit of an uptick again in the vanadium price, which is demonstrating both the tightness in the Chinese market, but also now we're starting to see perhaps some green shoots in industrial production coming out of those other main jurisdictions in just North America and Europe. And so we envisage in 2021, as those markets start to get back on their feet and really start, particularly in the steel industry, but also in the battery space and renewables, they start to move, invest further into that and grow those again, then we really see a really significant increase in the vanadium price.
Good. Thanks for that, Ian. And, if anybody attending the webinar wants to hear a little bit more, or, have a longer sit down with Ian, feel free to reach out to us. But we're going to hop. Thanks, Ian, for that presentation. We're going to hop over now to Antisense Therapeutics, so a bit of a change of pace. On the line, we have Mark Diamond, Managing Director there, and their flagship drug, ATL1102, targets Duchenne's muscular dystrophy in young male patients. Their ticker on the ASX is ANP, and the company's lead candidate is already in phase 2 trials, right? And their market cap is sort of hovering around the 60 million Aussie region, which is very reasonable for a drug company in phase 2. So, Mark, you're going to take it away with your preso.
Thanks, Tim. Yeah, I'll just call up the presentation. Yes, so thank you for the opportunity to present today on Antisense Therapeutics. As you highlighted, Tim, the company has a market cap of around 60 million. A recent highlight, though, was our successful completion of a capital raise, which was an institutional placement, well oversubscribed, excuse me, raising 7.3 million. We did that essentially at the market price. And on top of that, we recently reported a successfully completed and oversubscribed share purchase plan, raising 1.2 million at the same price. So significantly, strengthening the balance sheet of the company, taking our sort of current cash position to around 10 million, with an anticipated R&D tax credit to come. So these new funds will be directed towards advancing our lead program, as you highlighted, Tim, for Duchenne's muscular dystrophy, into a clinical study that we're planning to run in Europe, which we're expecting could be an approvable trial. So I'll go through that in more detail in my presentation. Companies based in Melbourne, of course, are listed on the ASX, but stock also trades on, the OTC platform in the US. We have a level 1 ADR program, and we recently dual listed on the Frankfurt Exchange. Company's got two products in its pipeline. We call them AT1101 and AT1102. These drugs we've acquired from a company called Pharmaceuticals. They are a 7 billion market cap NASDAQ-listed company in the US. So they are acknowledged as the world leaders in the field of antisense drug development. So the drugs that we're working on, we've acquired from the biggest player in the antisense world. Top shareholders include Platinum Asset Management. They are a global equities firm with, I think now, $22 billion under management. So we're delighted to have their continued support in the programs that we're running at Antisense Therapeutics. As I mentioned, we've got two drugs, AT1102 and AT1103. Given the time constraints, I won't be able to go into detail on AT1103, other than to say that drug is poised to go into phase 3 clinical trials, which of course the last stage of clinical development for a pharmaceutical product. And we'd be hoping to move into those phase 3 clinical trials with a pharmaceutical partner. So looking forward to report on the progress of our drug AT1103 into those registration studies. However, today's presentation, I'll focus on AT1102 for Duchenne's muscular dystrophy, where, again, Tim, you highlighted, we have delivered some exceptional trial results from a phase 2 clinical study that we ran at the Royal Children's Hospital in Melbourne. But before sort of detailing those study results, just a little bit on Duchenne's muscular dystrophy. It is a devastating muscle wasting disease that affects boys only. It's caused by a faulty gene, a gene that's responsible for making a protein that's important for muscle function. This protein is called dystrophin. So boys that have Duchenne's make too little of this muscle dystrophin. The lack of muscle dystrophin causes inflammation in the muscles, which leads to the loss of muscle function and strength. And essentially, the muscle cells die off in these boys. So initially, they lose the strength and function of the biggest muscles of the body, which are the muscles of the lower limbs. So usually by the time they're about 10, they end up being wheelchair bound. Unfortunately, it is a steady, progressive decline in this muscle loss. And so the boys, generally speaking, won't survive beyond their third decade of life. So the key challenge, with this disease is to look to stop that progressive muscle loss. The only way today to address the inflammation that is a key driver of that muscle loss is through the use of drugs called corticosteroids. These drugs are only modestly effective, but come with some very substantial side effects. And we've got them listed there as being increased weight gain. They cause osteoporosis in the boys. They cause mental and growth retardation. So they really are, a therapeutic class that comes with some very substantial downsides. However, because they're the only therapy that's available, to treat this inflammation, they've been recommended by experts to be used on boys as young as 2 years of age. So, there really is a desperate need for an improvement on a therapy that was first approved 60 years ago. So our drug, AT1102, we're developing to treat this inflammation and do it more effectively and safer than through the use of the corticosteroids. So as mentioned, we ran a successful phase 2 clinical trial at the Royal Children's Hospital here in Melbourne, who have the biggest clinic in the Southern Hemisphere treating boys with Duchenne's. We dosed our boys in the study for 6 months, and then we looked at the safety of the drug over that time period. But importantly, we also assessed the drug's effects on disease progression. We have done our initial study in boys more advanced with the Duchenne. So all our boys in the trial were wheelchair bound or non-ambulant. And so when we're assessing the efficacy in boys that are wheelchair bound, we're looking at the drug's effects on the upper limbs of the body, because they're the next major set of muscles to be affected by this muscle loss. And just to highlight, once the boys become non-ambulant, they never regain the muscle strength and loss associated with the disease. So, and in all circumstances, even when the boys are on steroids, they see a continuous loss of muscle strength and function. So it's important to keep in mind when you see the quality of the data that we've generated. Importantly, we're looking at the outcomes from the study. We saw the drug to be safe and well tolerated. We had no serious adverse events in the study, no patients withdraw. So very happy with the safety profile. But to this important point on the effects of the drug on disease progression, we were able to show that our drug had positive improvements on both muscle strength and muscle function over those anticipated losses that you would expect in these boys over that time frame, even when they're on their corticosteroid treatment. This improvement in physical function was supported by very exciting observations we made when we looked at the muscle of these boys under MRI analysis, and we were able to show that we could actually reduce the amount of fat that was in the muscle, because fat accumulation in the muscle of these Duchenne's boys is a marker of disease progression. Essentially, the muscle cells die off to be replaced by fat. So we were actually able to show a reduction in the fat fraction and an actual increase in lean muscle mass over that time. So, you can see here, we've included on the slide a quote from one of the world's leading experts in Duchenne's, Professor Thomas Voigt, based in the UK, who said, it was this consistent positive clinical benefit that we saw across multiple measures of disease assessment in these boys, backed up by the positive changes at a muscle structural level that's got him and us and all the experts that we've spoken to on this data very excited by those trial results. So, as I mentioned in my opening remarks around this capital raising and where we're going to be applying those funds, we're well advanced in our planning for the next study of AT1102. We're expecting that to, as I said, to be a potentially approvable study that we want to run in Europe. So potentially one clinical study away from seeing us able to commercialize our drug in the second biggest pharmaceutical market in the world. So we're expecting to be able to submit for trial approval first half of next year, and all going well to see approval to start that study in the middle of next year. The funds that we've raised will be going to the manufacturer of clinical trial supplies for that trial. But we're also working vigorously around our plans for the US, and we're talking to key opinion leaders, patient advocacy groups in the US, and also regulatory experts in the US to confirm our clinical path for the drug in the US. So in the time frame that we're expecting to see submission of our application and approval in Europe, we expect to be able to confirm the development path for the drug in the US.
Good.
Just looking at the considering the market potential of H1102, I think it's fair to say this is presenting as a very significant commercial opportunity. The DMD market is expected to grow to over $4 billion by 2023. We know at any one time, about half the boys with DMD are non-ambulant. And today, we're one of very few. I know of only 2 other drugs that are currently in clinical development for the non-ambulant boys. So in the DMD space, this has the opportunity to be a blockbuster drug alone. But we're really excited by this drug's potential to treat a broader range of inflammatory conditions. The global market for anti-inflammatory drugs is enormous. You can see it there listed at well over $100 billion US. And it is actually the second biggest therapeutic category beyond the oncology drug. So, we're really excited by the opportunity to be able to expand the use of H1102 beyond Duchenne's into some of these other, larger inflammatory conditions, but also to move into other rare diseases like Duchenne's, where there are very few therapeutic options. So, again, I think our shareholders should be very excited by the potential value creation coming through us expanding the use of H1102 into these new indications. This slide identifies the near-term value drivers for the company. Just to highlight all those noted here, really now are achievable for us based on the new financing that we reported just recently. So we're looking to advance on our drug into these new disease indications for inflammatory application of H1102, looking to define our clinical path of the drug in the US. We have an opportunity to partner H1103 in the acromegaly disease indication, and of course, advancing our drug into the phase 2B clinical study in Europe. So lots of news flow presenting to us, lots of important catalysts. Here are some of our recent highlights, including very important rare pediatric disease and orphan drug designations in the US and orphan drug designation pending in Europe.
Right.
So just to finish up, Tim, on the presentation then, just to say, we have a very advanced clinical staged pipeline, partnered with the biggest player in this field, Ionis Pharmaceuticals. So we believe significantly de-risked clinical program. We've developed very encouraging data in this rare disease, Duchenne's muscular dystrophy, where there are no effective therapies to treat the boys that are more advanced with the disease that have become non-ambulant. And we're well advanced in our planning for our phase 2B clinical trial with new funding, allowing us to take the program all the way up to approval, and an opportunity to move this drug into additional new indications, and looking forward to report on that progress to the market, in the near term. So I'll hold there. Happy to take any questions.
Yep. So I think we've just got time for the one, and you've briefly touched on this, Mark, but what was some of the other indications that could be confirmed as targets for ATL 1102? Or is it too early to say?
Sure. So, Tim, we've already shown the drug to work effectively in patients with multiple sclerosis. So we've already demonstrated data showing that we can reduce inflammatory brain lesions in MS. So that's one indication we already know that we can advance the program in. The other disease indications, what we're being careful about disclosing on those ahead of us filing for protective patents, IP. So we're thinking we'll focus in the rare neurological disease area, thinking the drug's profiling very well there in a number of indications. So it's a watch this space one. We are asking our shareholders to be patient, but in the long term, better for us not to preempt those indications, to ensure we give the drug the best patent protection in those new disease applications.
which is, I think we'll all be sitting on the edge of our seat for those announcements, and definitely look forward to that news flow. Well, thanks, Mark. Definitely good prezzo. But we're going to move on now to Recce Pharmaceuticals. So thanks for that.
Yeah, thanks, Tim.
All right.
Hello, everyone, and congratulations, Mark, on all the progress at Antisense. I've been following the company some time and well funded for the future. So all the very best.
Oh, thank you, and likewise. Looking forward to your presentation as always, James.
Thanks, Mark.
Yeah,
okay.
Awesome. So I'll just interject here before James starts. I was going to say that you guys pioneer a platform. Basically, is really what it is, with various applications for superbugs, emerging viral pathogens. We've been supporting Recce for quite a while now. I think since 15 cents, and you guys have been long-term clients. Something that we were going to say about James is that he's always shown a high degree of care and attention to his investors. So James, why don't you tell us why we should become shareholders at Recce Pharmaceuticals?
Of course, Tim, and thank you for the warm introduction as always. I guess in reality, I've been working with the team at Spark Plus for around 2 years now, maybe a touch more, 2.5, call it. But it's a combination of all factors. It's funny, so often one turns up for a presentation such as this and then quickly rushes to check post-presentation whether the share price responded. But it's not how these things work, and I'm not here today for that purpose. As people will tell in my presentation, we're passionate about what we do. We love to talk about it day in, day out. It's something to look forward to. And I believe over the time with certainly Spark Plus, we have had the opportunity of meeting all kinds of fascinating people and organisations and sharing that story. And as the time has gone on, most of those have engaged, and I see that engagement has been reflected in the share price. So the ability to come back to where we are today, previously preclinical, hopes and dreams, good indication of a technology that may be, to now a technology that's starting in two very pivotal infectious disease clinical programs with a number of preclinical programs working in parallel. So it's good to be back with you. I will jump across into our presentation now. The presentation itself, what is Recce about? So we're obviously listed on the Australian Stock Exchange. We are an infectious disease company commercializing new classes of infectious disease compounds with a particular emphasis on synthetic polymeric technology. What that really means is we design our compounds through synthesis with what we want in it, not reliant on what's given to us in nature, which is all existing antibiotics to date are naturally found. Our lead focus is sepsis, septicemia, or blood poisoning. That is where bacteria gets into the blood system, spreads very quickly, and is the #1 most expensive condition treated in health. We have a qualified infectious disease designation, which is a legal designation awarded by the US FDA for sepsis. And that's a designation against all types of bacteria, gram-positive, gram-negative, and their superbug forms, which provides us the unique position of 10 years of market exclusivity above and beyond our patent position, which as of recently is extended out to something like 2037. So we have a running in parallel government-backed market exclusivity in the United States and capabilities in other infectious disease areas such as viruses. As a snapshot of the company itself, the founding inventor of the technology is Dr. Graham Melrose. Dr. Graham Melrose is former head of Johnson & Johnson Research of Australasia, so a third of the globe responsibilities. He was also executive director of the board. Behind HSBC Nominees is one of the largest investment banks in the world, an absolute blue chip of such. I'm not allowed to say who they are, but in due course, I anticipate the opportunity may present. I'm in there at number 4. I am obviously the CEO, and I am the founding investor in the company. I'm not here as a VC flip, or I've been a commercial part of the company, surrounded by a fantastic technical skill set through the likes of Dr. Graham Melrose, Michelle Delizia, who comes in at about number 6. We've had a very good year of progress as a company. As you can see, over the 12 months, we've increased our share price by around 330%. And we've taken the opportunity to outline a number of the key announcements. In fact, in our AGM only a couple of days ago, we specified the key announcements over the year. It provided an average news flow of approximately a material announcement every 2 weeks. We all like to remain engaged. We have a market cap of around $200 million. We have a very strong cash position of approximately $25 million cash at bank. We have no debt. We wholly own our technology. We're caveat free. And we anticipate a further near-term R&D rebate. Many companies in Australia get the 43.5% government funding for Australian activities. We uniquely have government-backed R&D funding to include all of our overseas activities as well. So there'll be a further cash injection from that soon. The company, Dr. John Prentice, is our non-executive chairman. He is chairman of a couple of US large biotech companies, one on the New York Exchange, one on NASDAQ. His doctorate is in the study of bacteria and blood diseases. So he actually approached us initially saying, look, I'm an expert in this space. I love what you guys do. I'm formerly from Australia. How can I be part of it? And that was pretty good. I'm on the commercial side of the business. As I mentioned, I am from the initial inception of the company, and I've really built my technical capability through such. Dr. Alan Dunton, he's former head of Janssen Research, Janssen being the R&D arm of Johnson & Johnson globally. He's gone from concept to commercialization with 3 antibiotics. I think there's only ever been 35 in history, so he brings a wonderful pedigree. Michelle Delizia is Chief Scientific Officer and co-inventor of Recce antibiotics with Dr. Graham Melrose. Dr. Justin Ward, former executive of Pfizer, his quality, all the usual. A recent addition, Professor Philip Sutton, who's former head of immunology of CSL Melbourne, and he's leading our Helicobacter pylori program as one of the heads of Murdoch Children's Research Institute. So I talk about our company as an infectious disease company. Now, when we initially started with Spark Plus, we were focused on antibiotics only. This new class of infectious disease technology really sits as an umbrella over 2 main pillars: our antibacterial or antibiotic division, which is sepsis, burn wounds, and gastrointestinal tract infections such as Helicobacter pylori. And our other program, which sits to the right, our antiviral program, which is coronavirus, split between Australia and the United States, which we'll discuss in a moment, and purely focused on unmet medical needs. Why unmet medical needs? Generally large patient populations, but most importantly for the capitalistic amongst us, undefined pricing when it comes to the potential yield of your products at market. This is a snapshot of our pipeline. We have 2 compounds entering their first in human studies. The intravascular program is focused on sepsis. That's for IV infusion in patients in the very near term in CMAX, which is a clinical trial facility in Adelaide of Australia. A topical administration is running in parallel. That is a burns wound focused administration. Effectively, it's taking the same compound utilized in a spray on wound fashion, applying to burns patients in Fiona Stanley Hospital with world leading clinicians such as Professor Fiona Wood leading that program, and the patients will soon receive that. Viral indications, we were selected as a priority 1 test candidate in the CSIRO Doherty Institute coronavirus program. We've announced some very positive capability, and I laugh slightly because I'd set up to 99% effective, but we weren't allowed to say that in the announcement, but anybody can read the graph and see that. So just look at the graph, it'll tell you what you need to see there. Yes, we're different to all existing on the antibiotic side, all existing drugs to date. Why? We're not reliant on what's found in nature. Our compound is designed with what we want, attracted to the proteins of bacterial cells, interact with them regardless of their lipid outer layers and mutation, so on and so forth. This is our phase 1 facility. The phase 1 facility that we've recently dispatched that product you see in the top right-hand corner there too. That's for intravascular infusion in some 48 healthy individuals. It's a safety study. It's assessing how much compound effectively the patients can receive in their blood, whilst running in parallel is what I believe to be more interesting, which is the efficacy side of things on those vulnerable burn wound patients. This is the burns wound study we talk about there. That picture you see, yes, is a mock-up. We haven't got a professional photographer on it yet, but essentially it's stuff in a spray-on bottle straight onto the bacterial burn wound. There's no designation as to what type of bacteria. The beauty of our unique mechanism of action in this technology is it works on all types of bacteria, whether that be bacteria in your blood, which pathology draws are too slow to tell you what type of bacteria that patient has, which is a challenge at the clinical level, to obviously the surface wounds themselves. And that's in West Australia. This is stepping across to our preclinical programs. Murdoch Children's Research Institute, which is a leading institute in Australia. Professor Phil Sutton is leading our Helicobacter pylori program there. What that will basically mean, over 12 months, there'll be some half a dozen or a dozen studies in animals assessing the compound against Helicobacter pylori. We've done a number of those previously, which we've announced, and most pleasingly and interestingly, I'd say, by design, we see not only an extraordinary efficacy against the bacteria itself, but we don't see any impact on the healthy bacteria which exists in the lower intestinal tract. Why? Because our compound is highly soluble and highly effective against that bad bacteria which exists up higher. This is our coronavirus program in Australia, Recce 327, which is our compound otherwise being intravascularly infused in humans, focused on SARS-CoV in Australia. This is our patents as we know it, composition of matter patents, manufacturing, curative claims, preventative claims, different modes of administration, so intravascular, oral for H. pylori or E. coli, inhalation for the US coronavirus program, which seems to have not popped into these slides, but it's happening in the United States in ferrets as we speak. That's getting the compound onto the lung tissue of the animals, and results will be available within the December month that we're in at this moment. Essentially, we've got market monopolies through this patent portfolio out to 2037. That's how we wholly own our manufacturing. We don't own the building, but we own the equipment and effectively the personnel inside. We make it through extraordinary scales of economy. We have no expensive waste, 100% yield, and producing to phase 1 quality and volumes. And the coming up 6 months, if that reads correctly, is 2 clinical programs working in parallel, multiple preclinical studies assessing the compound in other unmet medical needs, which will create related news flow. We are engaged in large pharmaceutical company discussions, not through any particular want. We don't rely on them. The uniqueness of our position at the moment is an incredibly compelling technology with a strong balance sheet to support our present activities. But where we are a competitive threat to their existing portfolio, we also represent an opportunity. We're expanding our international awareness, which this happens to be an activity of at this moment. Our intellectual property will continue to strengthen, and we'll get more R&D rebates. So we're an infectious disease business in the midst of a global infectious disease crisis, and we really appreciate your listening.
Yep, pretty well positioned there. I think a question that came through was simply, how are the ferrets in the US, referring to the in vivo trials of the COVID-19,
Well, look, I can't say how they're going per se with our compound, but I do know the virus was deadly enough to knock a few of them off in just the infection stage of getting the animals up to an infected state. So I know they've got the virus because we had to replace those animals, but how our compound is going, we'll know soon enough.
Yeah, and we'll, I guess with bated breath, sort of wait for that announcement to drop sometime this month. It'll be on track for this month, or should we?
Yes, very much so. On track for within this month, or within this year, which happens to be the end of this month. So a lot to look forward to.
Excellent. So a little bit of a Christmas present for some of your shareholders, hopefully. Fingers crossed. Yeah. No, thanks for that, James. And as always, good presentation. So if anyone wants to, have a slightly longer sit down with James, feel free to reach out to myself at timothy.w@sparkplus.com. I'll put my contact details up, and James's contact details were up there as well. So thanks for that, James.
Thank you, Tim. Thanks all.
We'll catch you in the next one. Right. Up next, Mark. He's the managing director at PayGroup, Mark Samlal. Sorry, here we go. Yep, they are a human capital management SaaS play that takes on the full outsourcing of 5 million pay slips all the way through to treasury transactions. Now, Mark has an office in Singapore, which is how we got acquainted. And it's been quite exciting to work with PayGroup given their expansion around Southeast Asia. So Mark, why don't you tell us more?
Thank you very much, Tim. It's great to be here, and I trust the share screens worked okay.
Yep, that's all good. We can see your presenter just fine.
Thank you. Excellent. Well, yes, you're right. In fact, more so than an office in Singapore, it's where PayGroup was actually founded some 14 years ago by myself and my co-founder, Lawrence Pushman. We remain very much engaged shareholders and have moved the journey from having this as a Singaporean international firm through to listed on the Australian Stock Exchange. So deeply focused on Asian expansion and companies coming into Asia and making their way through their internationalisation. We support that. So just moving right along, I think the key part of what we do and how we focus on our ability is providing our customers with one view of their workforce. Payments, so we can actuate their payroll payments and pension fund payments, CPF, MPF, superannuation across 41 countries. And of course, our technology all has an artificial intelligence layer to it, so that employees can ask something very simply of the technology or type it in. Will Tim approve my leave today on a Monday? And they'll look at your leave record marking capabilities and say, no, you're better off doing it on a Tuesday. Maybe your football team's lost on the weekend and you certainly are not that great shape or greater mood. So we just simply enable the HR organisation, the payroll organisation, and the finance organisation to be far more effective in managing their HR talent. So certainly everybody's had the experiences, I believe, in the past of dealing with, a frustrating process in pay and a frustrating process with HR. We simplify that for them. Now, who do we do this with? We do our world-class SaaS and our services to both corporates, such as Westpac, such as Terminos. Most of the names on this slide you'll very much recognise, and Baxter, who's been a client with us for 10 years. So corporates are one large employer in the world, and the other large employer are workforce management companies, such as Michael Page or AgriLabour, or if you have an Australian focus, Bedison, or if you have an Australian focus, government training organisations that train and manage and employ apprentices. So our SaaS platforms and our SaaS technologies goes into corporate or into workforce management companies, and we give them a single view of their workforce across the jurisdictions that they operate in. So how do we do that, and why do we do that is basically the investable thematics of PayGroup. We are a fast-growing company, and since we IPO'd, which was May 2018, the main unit of our business is transactions. Transactions on our SaaS platform, transactions of payrolls that we do either on our platforms or on behalf of our clients, and transactions of moving payments of their payroll and or their pension funds across the regions. So transactions have grown significantly since our IPO, and that's a combination of organic sales and absolutely acquisitions. What's been tremendous, and during the last 6 months of this fiscal, we are balancer of March 31, is our new sales. COVID-19, absolute challenge for the world, but what it's shown to PayGroup and its addressable market is that you need to digitize. You can't have people in offices, you can't run manual pieces of paper, you have to be able to do things on a streamlined basis in the cloud. So we have got record sales in the first half of the year, and the sales that we've done in the first 6 months of the year equal what we did for all of last year. So now it's our role to obviously sell more and then implement what we have. All of our contracts are 3 years. They're 3-year client contracts with automatic renewals. And then compounding with that, you've got the fact that we have such a high level of retention rate over our businesses for well over a decade of 95% recurring revenue and client retention. So we're fast growing, we're SaaS, we're services, we give the last mile of payments for payroll monies and also pension funds, and it's a completely repetitive revenue business. So why do we do this? It's very, very straightforward. I'm an industry veteran. I've been in this space working for $70 billion companies, $35 billion companies in the 90s and the early 2000s. And it's very clear to ourselves that if we did this strategically out of Singapore and address companies' requirements across the region, selling to headquarters and international headquarters, that we'd be able to grow quite fast. And we've built and deployed our own technology and certainly our own SaaS platforms over that period. We've grown tremendously well in a very large addressable market during what Gartner said was going to be a tough growth area. And with the sales contracts that we have already signed and to be implemented, we've got great visibility into what our revenue models will look like moving forward. We were delighted just to recently announce on the Australian Stock Exchange our maiden statutory impact result a couple of years after listing. Very, very heavy investments in growth, sales and marketing, partnership programs, and we have $5.3 million in the bank. So to be able to execute on our implementation programs and our growth initiatives, we're very well funded. But our scorecard is quite clear and really speaks to what we want to achieve to be known as a highly fast-growing organisation in this space, and also with a very, very high level of quality delivery. We are pragmatic about the new contracts that we sign, and we do assess our new customers if they're ready to be implementable. So we're very focused on the right customers at the right time. And organic growth for us in terms of our sales organisation has also been underpinned by an extensive partnership network, which I'll explain a little bit later on in the presentation. Our efficiency programs have seen us do more with the same amount of headcount. So our technology enabling for our customers and our technology enabling the services we do for our customers, should they not want to do payroll and payments themselves, we can do it for them, has been very much underpinned by a continuous improvement process. And our acquisitions that we've done have been in the payroll HQ area about scale and sales expertise for the Australian market. Talentos was all about acquiring after a 5-year review of where we'd like to be, whether we build it ourselves or we acquire. with a technology solution that manages clients' HR functions from hire to retire. For those of you that know Elmo on the Australian Stock Exchange, we parallel extremely well with that technology set with our recent acquisition of Talent Oz. And during the due diligence process, we actually proactively built all the integrations. So when we announced the Volvo deal just recently, Volvo Group for Singapore, they use our strategic HCM modules, onboarding, recruitment, performance, as well as our payroll tech and our payroll services to outsource to. So that's an integrated view and a single view of their workforce. Our clients have grown, and next week we've got an EGM to ratify the acquisition and get the approval of the shareholders for the Payroll HQ transaction. That will add another 127 clients. They've been growing even since we acquired to our portfolio list, and they are all corporates that will have requirements for HCM modules and also to grow into Asia and beyond. So we're very focused on growth. We're very focused on our organic sales. We're very focused on our global payroll partner program, but quality can never be underestimated because we are dealing with people's lives and their ability to sustain their lives, particularly in some challenging times as 2020 has been, where either one or in some cases both the breadwinners in a family have lost their jobs. So as a snapshot, we are a leading provider of human capital management technology, payroll, payments, both to use for yourself or to outsource to us. And importantly, Gartner, which is an industry body and advisory body, have recognised PayGroup and its technology and service set in their multi-country payroll vendor guide for the 3rd year running. For our technical teams and our operations group and our client success delivery teams, that's actually more important when we first was awarded that than our IPO. So that's the focus of the business and certainly on our customers. Full outsourcing remains key. Most organisations in Asia Pac and the Middle East don't have a fully fledged accounting and finance and HR organisation in every country. That would be unsustainable. So providing technology alone does not give a customer competitive advantage in managing their people. They need to be able to provide the technology as well as the service, as well as the last mile. You're only as good if the money's in the bank. We consistently focus on reach, whether we expand by acquiring our partners, which we've done in the past, or acquiring new businesses or organic growth. We very much look at our client needs and the funnel of how they're growing, and we've got very good insights into where our customers are going. So a company like Appen, if they're going to open up in a new jurisdiction, we'll know ahead of time and we can plan for that. Got a very highly experienced board, and to date, that board has been predominantly industry focused, and I'll give you a snapshot of their biographies a little bit later on. But we've just added Mr. Shane Gill to our board, who has over 20 years experience in capital markets to round out what is a very experienced industry leading board. Okay, so for the technical people on the call today, we have a fully servicing SaaS platform that manages the entire life cycle of an employee from the minute you're thinking about hiring them, the recruitment process, all the way through to when you're retiring them. And this is specific for either a corporate organisation, such as an Appen, a DuPont, a BCG, a Westpac, or Michael Page, a Kelly, a Bettison. And they're very different ways of managing employees, a contractor as an employee, or a direct corporate employee. So the technologies are suited to those two particular segments. We're very focused on our pay slips and the amount of people that are on our platforms, because that gives us the opportunity, which we've begun this year, calendar year, to monetize our clients' employees. An example of that would be when a new employee comes onto one of our systems, they have the opportunity to look at an alternative superannuation product. Just to look at that, and that view is embedded in our onboarding workflow, creates a revenue stream for us. And then if that employee of the contract management workforce company chooses that particular plan, we get a further commission fee from that. So monetizing our clients' employees is a key part of what we'll continue to do, as well as providing outstanding world-class HCM and payroll technology.
So thanks for that, Mark. So we'll just go to questions now because we've got quite a few to get through before our next preso, if that's okay. So someone came and asked, where does the customer stickiness come from? Is it from the AI component that is proprietary? And, who are your major competitors?
Our major competitors are the world's billions of dollars of company.
Yeah.
And the reason that we win is because we're agile. We implement in weeks and months, not months and years across, and we get an ROI for our customer on their investment. The stickiness comes basically from delivering outstanding service and world-class technology and investing in that technology for quite a long period of time. We know our customers intimately, we understand where they're growing, and we help them grow. Right
on. Okay, just quickly, another question here we got. It says, hi, Mark. Why does it seem, in the first half of financial year 21, revenue and client numbers have increased, but the number of active users, quarterly timesheets have declined based on the half yearly presentation? And how do you foresee the competition in this? I guess you can go for that first, and then.
Okay, so remember I mentioned that we address corporate needs as well as workforce management needs. It's very clear in Australia, workforce management employees who are contractors did not work.
Yeah.
And we saw those transactions, active users, go like this, be quite straightforward and equal over January, February, and in March they took a V-shaped dip. I'm very pleased to say it's moving back upwards. So New Zealand went back to work first when we're there, and then the eastern states. So you will see active users rise. That will give it incremental revenue increase. However, our monetization strategy in that workforce management sector and the offering of other services held our revenue solid, as well as minimum fee contracts. So if you contracted for 250 people, you stayed. But if you employed 500, you would normally go up.
You'd pay more,
So that's a great part of our outlook. So if you believe more people will be employed post-COVID, invest.
I think, the answer for that is quite straightforward. One last question before we move on is, how long is the lead time for customer conversion?
From signing a contract to going live, 4 to 6 weeks. From identifying a prospect to moving them into qualified and to close, about 2 to 3 months in the corporate space, about 4 to 6 months in the workforce management space. It's halved since IPO because everybody likes to know that you're not private.
No, fair enough. No, well, thanks for that insightful presentation, Mark. And I think there's much more to the story to tell. So again, if anybody attending the webinar wants to hear more from Mark, feel free to reach out to us or directly to him. We're more than happy to facilitate that conversation.
Thank you so much. It's great to be here today.
No, thank you. Thanks, Mark.
Goodbye.
Well, up next, we've got Stuart Manifold. He's the Executive General Manager at iCollege. Their ticker is ICT. They're a group that owns 4 RTOs, registered training organizations, for those who don't live in Australia. And they've seen their revenue grow exponentially in a post-COVID world in the VET sector. It's the type of business that has traditionally performed very well in a recession, and the Australian government is also pumping stimulus into the education sector. We recently helped their company in a raise and also cover them with research. So quite familiar with Stuart and the team. So Stuart, if you want to take it away.
Thanks, Tim. Thanks for having us. Welcome, everyone. I'm going to take everyone through a snapshot of iCollege, and as Tim mentioned, currently listed on the ASX under the code ICT. We have 6 training companies that deliver accredited and non-accredited training in Australia and internationally. Quick look at our board. We have Simon Tolhurst, who is is the litigation partner for Ebsworth in Queensland as our non-executive chairman. Ash Katter, who has significant experience in the vocational training space and has built a number of businesses from the ground up, culminating with Cero Institute and Cero Learning that was vended into iCollege in 2018. And Badri Ghasavi, who's an executive director and our CFO. Badri has a Bachelor of Business and Accounting. He's got a great deal of experience in the hospitality space, has mining interests internationally as well. So it's a very tight team that's driving the growth of the business at this point in time. The capital structure of the business, and I'll talk a little bit later about the raise that we've just undergone, but we currently have a total of 581,564,649 shares on offer. The board and management hold 14.7% of the company, and our top 20 shareholders hold about 51% of the business still, even post-raise. So it's a very tightly held register. We have options. We have 10 million of those at 5 cents expiring in July 2023 and 12 million at 15 cents expiring in November 2023. So not a lot of dilution available within the business, and we're certainly very well funded moving forward from this point, but we'll talk a bit more about that later. Our students, this is a really interesting slide. We have 2 very clear cohorts of students. We have domestic students that are based here in Australia. They're Australian citizens. They're entitled to access free or very low fee courses that are funded under state government contracts that are jointly funded by the federal government as well. Payment gets made on completion of units of competency. So every time they come to training for a month and complete 2, 3, 4 units of competency, we put in a claim to the relevant state government and are paid on it the following month. We're currently really aggressively expanding our domestic market and our domestic offering. Given COVID has put a bit of a hold on international students coming into the country. Our other cohort of students is exactly that. It's our overseas students. They're studying in Australia, generally under a student visa. Now, we have an allocation by the government, by immigration and by ASQA, the regulator here, of 1,300 places, and we currently have over 800 active students. The nice part about international students is they're all full fee paying students. They either make upfront payments for the whole course or we establish a payment plan. Now, again, talking about progression through the course, it's part of their requirement under their immigration and under their visa to show that they're progressing through their course and heading towards that qualification. We've recently started an expansion into the Southeast Asian market with marketing staff looking after Japan and Korea. These are the areas that we see opening in some kind of a travel bubble for students fairly quickly on the back of COVID and with things moving forward. Our businesses, we have Cero Institute, which is without a doubt the flagship of the group. Cero runs both domestic and international students. We teach hospitality, business, foundation skills, community service, English language and information technology. Celtic Training is focused on healthcare and community services and is based in Adelaide and on the Gold Coast. Capital Training Institute is our building and construction focused business operating in Sydney, Brisbane, Gold Coast, Canberra and Adelaide. Tested English. Tested is our English testing business that we structured in partnership with Cambridge Assessment English we are the exclusive provider in Australia of their new second level test for English language, allowing students to get access to university or vocational training. The product's called LinguaSkill. Now, there was a bit of a stall with this through COVID. We expected it might actually drive greater usage in linguist skill because we couldn't get 40 people into a room to do testing. But the universities were very, very busy with taking all of their students from classroom to online. And the last company in the group at this point in time is a hacking school. Now, the hacking school was India's first IT boot camp style training business. We've acquired 80% of the business and are rolling out IT training both here in Australia and in India, online and face-to-face. And a secondary piece of that is the coding factory, where we're targeting kids from 5 to 14 and giving them a gamified exposure to coding. That's going to be important as Australia moves forward because we've got a shortage of those skills here in Australia at the moment. Our strategic advantages are very, very simple. We have a really expansive geographical footprint. We've got 8 campuses around the country. And we have state government funding contracts in 5 of the 8 states and territories, and we're looking to expand that very quickly. So I think we'll see number 6 come on fairly shortly. Those funding contracts are what allow us to access all of the stimulus packages. They allow us to provide training across the areas that we're registered in Australia at the moment. Now, we're the only ASX-listed company with 5 funding contracts, so across 5 of the 8 states and territories here in Australia. We've got unique revenue streams for both international and domestic students. So pre-COVID, that was split about 50-50, 50% international, 50% domestic. We've got a current CRICOS or international student allocation of 1,300 that I mentioned earlier. And we've got a diversified international student cohort from over 33 countries. Now, interestingly, even pre-COVID, China only represented 5% of our international student base. We had the capacity to move very quickly when the flow of international students slowed back into the domestic market, and the domestic market here in Australia has really become focused on getting people job ready and getting Australians back to work following COVID. And I'll talk a little bit more about that in a while. We also operate a significant network of over 150 international student recruitment agents, both here and overseas. So these guys work with us hand in hand, provide students with information about our colleges and look to recruit them for our colleges. The fourth strategic advantage we have is we operate in some very niche markets. So Sero Institute has a part of the business called Sero Corrections that currently delivers training in 5 of the 11 correctional facilities or prisons within Queensland. And we're actually getting people ready for release through these programs. They come in and they're leaving prison job ready. We have a 95% completion rate with that program. The hacking school, again, very niche market, addresses the skills of IT professionals, delivering them up to the minute training that they can come back to. They can come back and do another boot camp if they want to upskill themselves further. We are, through Sero Institute, one of the only RTOs qualified and accredited to deliver the diploma in, the diploma in advanced diploma in blockchain technologies. And again, the partnership with Cambridge Assessment English is a very, very big tick in the box for us. We're working closely with them to further develop version 2 of LinguaSkill at the moment, and we expect to see some movement on that early in the new year. This is a great slide. It's about our growth. So in September 2017 was the time that we agreed we would vend in Sero Learning and Sero Institute to iCollege. The market capitalisation of iCollege at the time was 2.7 million. Today, we're sitting, in fact, north of 65 million market cap. Big difference in share price. Student numbers, 300 back then, over 2,000 now. Over 800 international students now, none back then. 8 campuses around the country versus 1 in Adelaide at that point in time. Staff growth, course offerings at 60 plus courses now that we're offering in these high demand areas, and a course completion rate at 90%. Now, This is really important. I mentioned earlier that we get paid on completion. So as students domestically complete, we get paid. As students complete and progress through their international training, we get paid by the student as well. We're well and truly above the national average for completions as well, which is sitting at about 48%. Again, another great slide, our FY 2021 performance. You'll see here a lot of record revenues, record cash collections, record EBITDA of 703. So it's been a really strong start to the year. The graph at the bottom shows revenue in 2018 at 2.7, growing to 10.8 in 2020. Now, halfway through 2020 in the half year, we announced a maiden EBITDA for the half year, and then we walked into COVID. So we had to defer a lot of payments, and we had to really think quickly about how to move the business in a direction that would continue to generate revenue. But it stalled the revenue and stalled the annual maiden EBITDA for us. However, you know, Q1 has already delivered over 40% of last year's revenue. So we're in a very, very strong place. And in fact, we announced on November, we gave an update that we're well placed for a record half year with, including October, $5.6 million worth of revenue and 1.12 in EBITDA. So we're growing strongly, and life's just getting better. I mentioned earlier that the federal government in Australia looked to work with organisations like ours to, and all training organisations to recover from COVID. And part of the Morrison, or main parts of the Morrison recovery plan were all about jobs. So the federal government invested $1 billion, or invested $1 billion into a job trainer fund. Now, every year, the federal government provide revenue to the states to provide vocational training. It's really important to note that this is additional to that standard annual revenue. So there's an additional $1 billion for training to deliver free or very low fee courses targeted at school leavers and job seekers. And it's really designed to develop this job ready workforce. Now, to access Job Trainer, you access it through these state funding contracts. And again, I want to make the point that we are funded in 5 of the 8 states and territories with funding contracts, and looking very closely at number 6 at this point in time. It represents an additional 340,000 training places in the country. The next slide just gives you a snapshot of the additional number of places in the states and territories where we have funded contracts. So education is something that just never goes away, and it's something that people and the governments are really concentrating on now to ensure that we've got this job-ready workforce coming out of COVID. The other thing that the federal government did was looked at and very quickly rolled out an infection control training fund. Now, this was an $80 million fund, and the average around the country is about $400 per person that delivers it. You'll see the map on the corner. It shows you the per person fee that we're paid when we deliver this training in those states and territories. Now, we can deliver this either face-to-face or online. We've worked really diligently to look at organisations and industries that need to ensure that their infection control training is second to none. So we've actually got a signed letter of intent with Aegis Healthcare, who are the largest independent aged care provider in Western Australia. They've got 3,500 staff, over 27 facilities, and we're starting already to deliver that training to those employees. We've worked with a significant taxi company in Canberra and have helped their drivers understand that infection control in the cabs and how they go through that. Then we have an exclusive partnership with the Pharmacy Guild of Australia, who are the community pharmacy's peak body. They represent over 5,800 community pharmacy members in the country, and we're working with them, having customised the training specifically for retail in pharmacy. So this is a really exciting program, and we're expecting to put some more news out on this fairly shortly.
Yep. Stuart, sorry. maybe we'll do one last slide and then quickly go to a question so that we've got time to get through those.
We've hit the last slide, Tim. So as Tim mentioned, we raised 5.5 million in October this year. It was oversubscribed and strongly oversubscribed. Thanks to the guys at Spark Plus and our other partners. We're going to continue knowing that we've got a strong balance sheet and knowing that we can get out and get after some COVID bargains from organisations who have struggled. We're going to continue strong organic revenue growth. We will continue to focus on these high demand skill shortage areas. It's something we do really well, and it's something we'll continue to do well. Further geographical expansion, and I've hinted at that, but we're looking at some opportunities at the moment. We're focusing on offshore commencements of students. So when the borders open, we've got that strong pipeline. We'll be delivering a strong maiden annual EBITDA, and we're looking at some accretive acquisition opportunities right now. So,
excellent. So a question that came through, Stuart, are these courses designed for jobs in Australia, or are they also equipping learners to work outside of Australia? And if so, will you be adding other languages other than English to your curriculum?
Look, the Australian qualifications are incredibly well regarded the world over, which is why students come here. In fact, Australia is now the second choice of destination to study for international students, just behind Canada. So our qualifications are well regarded the world over. In order to be accredited here, we have to deliver them in English. So no, at this point in time, we won't be. However, with things like the hacking school that already deliver in India, there's opportunity to do that as well, where we're making acquisitions in other locations.
Agreed. I think as a former international student in Melbourne that ended up actually working for a higher education registered training organization, I'm uniquely acquainted, with the position that iCollege is in, and I definitely agree with everything Stuart sort of talked about in his preso. So thanks for that, Stuart. We'll catch you in the next one. Thanks for today's presentation.
Thanks, Tim.
Awesome. Well, up next, the next company we have presenting is CV Check. Their ticker is CV1 on the ASX. We've got CEO Rod Sherwood with us today. If you've ever been in the position of hiring someone for anything, any position, you'll know that it's wise to be a little skeptical of what applicants put on their resumes. But Rod and his team have they've come up with a unique resume verification company that's already integrated into LinkedIn's Talent Hub. So Rod's business is able to verify individuals and their resume claims, making hiring online that much easier, which is happening more and more often in a COVID world. So Rod is one of the most professional executives and presenters we've dealt with at Spark Plus, and he's here to tell you more today.
Hello, everyone. Well, I understand we're on a fairly limited amount of time available in the entire presentation day, so I'll rattle through this pretty quickly. I imagine there may be some Q&A at the end, but let's get into it. CV Check is a background screening company, and we're enabled by technology. As you can imagine, we're very much into the compliance game. So to kick off, let's take a look at some compliance. Here's a disclaimer, and to set the theme. People screening and verification. I think the best thing we can do to start this deck is to position what that is. People risk management is a key issue for any organisation providing services to their customers. In a nutshell, you combine physical assets with the capability sets of people in a workforce. That combines to produce a service which you then offer to your end customer. So you need to know that the capability sets in that workforce are solid. That's where CV Check comes in. We explain these frameworks of risk management for people. And then at a granular level, we get a clear candidate picture for every single person that's in that workforce for that particular company. The things we look at are identity first. We prove that up. We make sure that the person that you're looking at is indeed who they say they are. We then look to their actual capability sets, their credentials, professional memberships, the regional training organisation certificates and transcripts that they've got. And these prove up the qualifications this person has for the role. And then finally, we look at safety. Is this person safe to come into your organisation? Integrity. We look to criminal history, bankruptcy records, credit default, other business interests to look at fraud. Once we compile these facts for our business customer or our individual, they can then present them to the prospective employer or somebody else using our platform to deliver that. So all of this composite picture gives you a clear candidate, composite information gives you a clear candidate picture, and you can then get them into a workforce in a more trusted level and leverage that trust into them doing a great role. How do we do that? We provide enterprise solutions through our software. We also educate our client base in how this risk management process works, what are some of the issues that they may face. And we deliver that through our platform of delivery, the CVCheck platform, where you have this at the center of this picture, this privacy compliant triangle, where the individual customer or candidate can securely exchange information with CVCheck and the business that needs to know this information, or the regulator that needs to know this information. CVCheck then goes through a process of receiving the order through its own platform, CVCheck, or via these integrations with other HR and other technology platforms. We then process the information by releasing our workflows, our workflow engines, or our interfaces with certain data sets to go and get the information, verify it, compile it, render it into a digital certificate, and load it onto a dashboard used by that individual. That's all backed by a fantastic technology stack. But basically what all of this does is take what has previously been a very complex process and turns it into something easy to use for each individual in those different parts of that process. Our go-to-market, we have two proven go-to-markets. The first is our direct organic model off our own website. We have direct B2B sales, marketing, and we receive B2C customers as a derivative of that B2B approach. The second area, which increases and broadens our theoretically addressable market, is one whereby we integrate with other technology platforms who run the applicant tracking systems or payroll systems or other enterprise-wide people management systems in an organisation. And that's now getting traction and generating good ARR. These integrations bring us higher margins through the provision of multiple checks in each candidate order. So definitely a proven plus. We have a third now, which is new. So we're just in the process of commercialising this. We announced the acquisition of two marquee clients in this past month, Netforce Global and Vero Screening. This is a deep international marketplace. We're only just entering it right now. However, we've already reached the point where we're producing recurring revenues from these clients, and we look to build out this pillar in a way that's much more accelerated even than our integrations model. Some of our clients, we have thousands of B2B clients. They range from very large enterprise, super complex needs, which our platform provides all the solutions for, to SMEs. There may be a 5-person plumbing shop in South Australia that needs to get people screened in order to get access to a particular government contract site. So very broad, deep client base. No single one of these names represents even 1% of our revenues. So it's a very proven model which has large scope. Technology stack, we invest in all the time. We're constantly making sure that it is not bleeding edge, but leading edge. It meets a whole bunch of the security requirements and privacy requirements people have, very scalable. The issue that we do need to embrace, though, is that the customer really doesn't care. They just want their solution to work. So these are under the hood. It's how we're oriented. but we really focus on the customer experience. How is all of that go-to-market translating into our revenue? Last year, we booked 12.4 million of rev. 10 million of that was recurring revenue, very high quality. Margins have expanded now to 55%. We had our best September month on record in the history of the company. Booked 3.4 million of revenue in Q1. Generated $500,000 worth of cash in Q1, and that led to an increase in bank balance, such we have 5.2 million. Our company has transitioned from being essentially a new brand in FY16 to where we are now. So you can see that there's been steady growth. In FY16-17, the company had a focus which was a little bit too oriented toward B2C, which wasn't high enough recurring revenues. We've changed that over the last few years, and we now have a business with a material amount of recurring revenue through repositioning to a B2B focus in our go-to-market. Very high quality revenues now, over 70% coming from B2B, and it's sustained growth. That's played out in terms of also rewarding us in repositioning our cash flow profile. You can see here now that after FY19, FY20, we had some impact from the COVID period, but we contained that, and you can see here that in the current period, we just generated a little bit of cash. And we do expect to be operating the business in a way which is sustainable, looking to grow our revenue base even further and gain more market penetration, both in Australia, but also New Zealand and offshore. I talked earlier about our integrations model, and you can see here that we now have a broad range of integrations. It follows a classic pattern of pre-commercialisation in FY18 through to then starting to accelerate that. We're looking to continue that trend now. We've put more B2B and marketing muscle behind this. Our revenues are very broad-based, both by company numbers, but also by industry. We do have geographical concentration in Australia and New Zealand, but you can see there that we're now building out our range of industries. You can also see that though we launched the brand behind one type of check in FY16, we're now broadening out the range of revenue that's coming from other checks, and that's actually driving expanded margins as well. COVID-19, I think there's been a lot of focus on some of the volatility that's caused to many people and many other businesses. In our case, it provided a great opportunity to prove our management team's capability. We came through this really strong. We maintained our customer service. We were agile in response, and we've come out of it the other side with growing revenues and a bit leaner. So very proud of what our management team achieved there and where we're positioned. So where does that leave us going into the close of this calendar year 2020 and into 21? We're a people risk management business. We've commercialised our technology. We've got a blue chip client base. Great balance sheet and strong passage was shown through COVID-19. Great management team capability in that it's a sustainable, growing organic business. We need more scale. This company's a $50 million market cap. We've got, we think, modest revenues for the quality of our client base. We're going to change that, and we've set about doing that with some way advanced. But still, I think that the company now, you can see, based on the economic performance, is producing better and better performance all the time, and we're now at a great inflection point. I'd like to open for Q&A, should there be any. But if not, thank you for listening.
No, thanks for that, Rod. So yeah, a question came in actually about potential upcoming partnerships or integrations to accelerate further rollout. You mentioned earlier that, you know, there is a need to expand that base. So yeah, if you can talk a little bit more about that.
Yeah, I can. So each one of the integration partnerships that we have opens up a new area of the market that we can directly address. So you have a theoretical marketplace, but there's a lot of organisations which are essentially locked behind their technology platform. So each new integration that CVCheck builds and negotiates with partners leads to an opening of the theoretically addressable market into one which is directly addressable. So we are working on these. We're getting, in general, about 2 builds a quarter going through, and each new build leads to, on a lag basis, usually 6 to 9 months, an increase in client order flow. So we do have some. We're working on 2 currently, and as those come to fruition, we'll announce them. But generally, they're coming on about 1 a quarter. So it is underpinning growth, and it's also an underpinning margin.
Okay. Yep. And can you talk a little bit more about what the, I guess, onboarding process is like for B2B, or if you're doing a new integration?
Yeah, for B2B, there's actually a demo thing. I'll just reshare the screen.
Okay, yeah.
So people will be able to see this. You can see here that there's a way to get a demo. You go to cvcheck.com, business-demo-watch-video.
Rod, sorry. Were you meaning to share your screen again? Because
I am, yeah.
Okay, there we go. We've got it.
Yeah, so you can see here at cvcheck.com, you can go pick up a business demo.
Perfect.
That will show you and demonstrate how the system works. And an example of why this came about, this demo, when we were building the integration with LinkedIn Talent Hub, we enabled a whole bunch of things which would mean that a business could completely self-serve in the onboard process. So that came about as we enabled that integration, and we're now engaging with LinkedIn to help them roll out Talent Hub, which was actually suspended for a good 6 months as they were affected by COVID and their company reaction to that. But we're picking that up again in the new year.
Right. So in terms of onboarding, what does that process sort of look like? Is it completely managed by the company's HR manager?
It actually, the sale is such that you have procurement, the HR manager, generally the hiring management team. There'll be the compliance team as well. And then there'll be the IT and security team. So you've got quite a number of people in large enterprise that need to engage with CVCheck as a large enterprise before they actually onboard. When we reach the point where we've agreed the contract and the length of the contract and the exclusive terms, we then hand it into our onboarding team, client services team, of which we've got 4 members in Australia and a couple of members in New Zealand. And they then take a very large complex business, say an Optus or Medibank, and they take all of their users through the onboard process. And that will involve people from accounts, legal and compliance, the actual user base who are ordering all the screening processes and so on. And they each have their different components of the system in which they need to be onboarded on. And once that's set up, generally takes, for a large organisation of many hundred users, that will take a couple of weeks. Not full time on our part, but for the organisation.
Yeah.
And then they're away and they can start ordering. So generally what we see is there's a ramp up period that takes place where all the users get accustomed to how it works. And then for a very large complex organisation, they're fully functional before they get to the 6-week mark.
Okay. So that is quite quick. Another question posed by a viewer. How many checks are mandated by the government for new employees, and how many do you offer that are optional for employers, so like a value add?
Okay, so that ranges according to the different organisation you're talking to. So if you take, for example, the financial market industry where you have AFSL requirements, so brokers in stockbroking firms, portfolio managers in wealth management firms, they will have a bundle of checks that they need in order to get their AFSL license. We generally see at least 4 checks in that bundle. And yes, they are mandated and they're actually pre-populated. In other sectors, it's more what is their compliance framework. So you will have different levels according to the level of role that's being onboarded. In the case of a bank, at the top level where you've got a CEO or somebody in the C-suite, the largest number of checks we've seen in a bundle for them is 26.
Okay. Yeah.
And that's a value of around $1,500. But that ranges in other cases where you're looking at labour hire, casual workforce, you're really looking at 2 or 3 checks. You know, it might be, do they have rights to work, criminal history, and are they actually fit to drive the vehicle for delivery?
Okay. No, thanks for your answering the questions as well as the informative presentation, Rod.
My pleasure. Wish everybody well and best of luck for the holiday season.
Yep, we'll catch you in the next one.
Yep, cheers.
All right. Up next, we've got Visioneering Technologies. Their ticker is VTI. They're involved in the production of innovative multifocal contact lenses, as well as contact lenses that could correct your eyesight. So this is a huge problem here, especially in Southeast Asia and Singapore, and that's how they caught our attention. So it's my pleasure to introduce Dr. Stephen Snowdy, CEO of VTI. Stephen, how are you?
I'm doing quite well. Thank you very much. Let's see if we can get a screen share going.
Yep.
How's that look for you?
Yeah. I can see.
Very good then. Yeah.
Yeah, no, all good. Over to you, Stephen.
All good. Okay, very good. Appreciate it, Tim. Well, thank you everybody for tuning in to listening to a quick introduction of VTI. I think I stand between most of you and lunch. So we'll keep this as efficient as possible. Quick disclaimer for you. If you didn't get a chance to read that, you may want to look into our contact lenses. I'm the CEO of the company. I've been CEO of the company since 2013. I've been a member of the board of directors since 2008, chairman since 2009. Back then, I was a venture capitalist and was, the person who put together the first institutional deal for the company between our venture firm and another one. So I've been involved with the company basically since napkin drawings all the way through regulatory clearances and now in a commercial global launch. I'm a scientist by training, a neurobiologist, MBA, finance, 17 years of experience in managing life science ventures. Tony Summer runs our sales and marketing. Tony joined VTI after many years in the vision care industry, the most recent of which prior to VTI, he ran one of the largest contact lens or vision care sales forces out there, that of a company you've probably heard of called Bausch & Lomb, where he led US vision care for Bausch & Lomb. Ticker code is VTI. We've been public since 2017. 2017 is really the year that we launched our sales and marketing efforts in earnest. So we're a fairly new company with regard to commercialization. Market cap's right around 30 million Australian. That's only about 3 times of our annualized revenue from the last quarter. Currently have enough cash on hand to get us through approximately into the third quarter of 2021. And our largest shareholders in the register, composed of institutional and some individuals. Thorney Investment Group out of Melbourne, Australia, Regal Funds Management, 2 of our very large holders, and also 2 of the largest funds that are in Australia, Charter Life Sciences, Memphis, Biomed Ventures, 2 of the firms that got the company started back in 2008. Personally, I own 1.4% of fully paid shares in the company and around another 4% or so in options. And so what is it that we do? Let's get into the heart of it. We're a contact lens company. And these aren't just regular, contact lenses. As Tim mentioned at the very beginning, these are something called multifocal contact lenses. Won't get into the design details of what that is, but what they're used for is super important. two patient populations that are prescribed our lenses. The first of those is composed of nearsighted children. Technical term for that is pediatric myopia. These are children who can see things up close, but they cannot see things that are far away, such as a blackboard or at school or a ball while they're playing sports. This is a progressive disease for these kids, and that is part of the tragedy of it. And the worse the nearsightedness becomes in these children, the higher at risk they are throughout their entire lifetime of going blind or getting some other really serious ocular diseases that we'd much rather avoid. And these are very large markets. So you're looking at a quarter to a third of children in the United States are nearsighted. 80 to 90% of children in many Asian countries are nearsighted, such as Singapore. Singapore actually has declared nearsightedness in children to be an epidemic. And obviously this results in very large addressable markets for us, around $2 billion in addressable market in the United States for the management of nearsightedness in children. China alone is worth about $10 billion of addressable market when it comes to managing nearsightedness in children. Important to know, our lenses have been shown clinically. These are our contact lenses. They're daily disposable. Kid puts them on in the morning. They see clearly all day long. They take them off at night and they throw them away. But more importantly than getting them to see clearly is that children who wear our lenses experience a stop or very substantial slowing of the progression of their nearsightedness throughout their childhood, which again is very important because the worse that nearsightedness gets, the higher at risk they are all the way into adulthood and for the rest of their lives for blindness and these other ocular events. So very large addressable markets. We have a product that addresses this very, very well. The other patient population that is prescribed our contact lenses are people over the age of 45 to 50 who are losing the ability to see up close. And our typical patient here, our target patient, is somebody who's been wearing contact lenses to clear up their distance vision, probably since they were kids or young adults. They hit 45 to 50, and not only can they not see distance, but they can't see up close anymore either. This person is pretty easy to spot. They're in a restaurant. They take their glasses off to look at the menu because it actually makes their distance correcting glasses makes it harder for them to see up close. And then they take their phone, they turn on a bright light, and they light up the menu with it. And nothing says I am over 50 like taking out your phone and lighting up the menu with it in a restaurant. So, you know, if you're one of those people, either get into our contact lenses or just order the special and be a little less embarrassing for you. But this is obviously a large market too, because almost everybody over the age of 45 to 50 suffers from this loss of near vision, which a technical term for that is presbyopia. And so we have a $3 billion addressable market here in the United States. And of course, you know, as is the case with nearsightedness, large markets around the world as well. And just to give you a sense of what myopia progression or the worsening of nearsightedness typically looks like in a kid with and without our lenses, that really tall column at the left side of the graph is how much a kid is progressing prior to wearing our lenses in a clinical study that we've done. And this was just presented at the Global Myopia Symposium back in October. And then what you see here is a plot over time. So, you know, basically the tall one being before our lenses, and then all the way out to 5 years, what the kid's progression or worsening of nearsightedness looks like as they're wearing our lenses. And we're very happy to see that children wearing our lenses see almost no progression or much less than they were getting prior to wearing our lenses. So I mentioned some really large markets for myopia management around the world. To give you a sense of where we are in those markets, these are some of the clearances that we have. There's a couple that we're still working on, like China and Japan, but we have been cleared in Australia, New Zealand, Singapore, Hong Kong, Recently, Canada, we've been approved in Europe, and we also sell in the United States. Almost all of those, except for the United States, that's our longest standing clearance that we have. Almost all of those are clearances that we've received just since 2017 when we went public. So obviously we've been investing and working very hard in getting these global clearances to sell our contact lenses for managing myopia in kids. Inside the United States, the way that we've started selling is through a direct sales force that, again, is managed by Tony Summer. Outside the United States, what we do is we team up with other companies for sales and distribution. For example, in Singapore, Oculus is a company that we recently teamed up with after getting our clearance and registration in Singapore. Oculus will be taking on the sales and distribution, logistics and fulfillment and marketing of our products in Singapore. We do the same thing over in Europe and a couple other territories around the world. And in 2021, we may be looking to add additional partners for additional geographies. But this gives you a sense of what we've been up to for the past few years, in addition to selling products in the United States and launching products in some of these territories, is getting these clearances around the world that now we can start harvesting. A couple of years ago, you may not have heard much about nearsightedness in kids. The way this used to be dealt with is you throw some glasses on a kid, you give them some contact lenses, you clear up their vision and call it a day. And, you know, for the past couple of years, we've been one of the only companies out there which really gives us an early mover advantage, talking about the importance of not just throwing some glasses onto kids or not just putting some regular contact lenses on them to get them to see better, but managing that nearsightedness so that it doesn't get worse throughout their childhood, throughout their early adulthood. But recently, over the past year or so, maybe 18 months, we started to see a rapid increase in interest. That interest is being driven by parents, it's being driven by practitioners. COVID-19, we think, probably has had some role in alerting parents to the importance of managing this nearsightedness, trying to keep it from getting worse. But just some examples are listed here. Menicon is a company that has actually been interested in myopia for quite a while, but just got their first product approved in Europe last year. They approached us as a company with a different type of product for treating or managing myopia in kids, and asked to partner up with us. So we signed a deal with Menicon last year where they're going to private label our product and sell it in Europe. And to give you some perspective on Menicon, it is Japan's largest contact lens company. They're a pretty close to $1 billion a year of sales in contact lenses. Did quite a bit of work with our lenses before agreeing to take them on under their name. But that's just one example of a company that has really gone out in this myopia space and is starting to chase it very aggressively. The Global Myopia Awareness Coalition is a coalition of the large companies and this little company, Visioneering Technologies. We were a founding member of the Global Myopia Awareness Coalition a couple of years ago. Just the fact that we're all getting together and in an organization like this with a goal of educating practitioners, educating parents, getting the message out there that, hey, myopia is a progressive disease and has to be treated as such, you know, really says that there's a lot happening in this space. J&J Vision Care recently announced that they are putting a product through development. It'll, you know, we expect to be several years before that product comes to fruition and gets clearance. But just the fact that they're doing that really says a lot, given that they're the largest contact lens company in the world. Bausch has recently been acquiring some assets in the space. Cooper Vision, one of the large 4 contact lens companies in the world, just came into the United States with a product of their own. So there's a tremendous amount of newfound interest in this area of nearsightedness in children. And we are at the forefront of that and have been for a couple of years, which really gives us a big advantage.
Yeah.
So this is...
Sorry,
Yep.
Dr. Stephen.
Yep,
We actually got quite a few questions to get through. So if you want to sort of wrap up and then we'll go to questions,
Sure.
because I think that's what specific.
Yeah, we'll make this the last
for.
slide, and just a quick snapshot of the financials. In 2016, we were a $200,000 company. 2017, the first year we IPO'd $1 million. 2018, 3.3 million. 2019, just shy of 6 million US. Then the pandemic hit, and in April we laid off half the companies to manage cash, like a lot of companies did. But in the third quarter, calendar quarter of 2020, we saw an extraordinary turnaround. We set metrics, even with just half the companies we used to have, set records in almost all of our financial metrics. Cash receipts, 2.7 million Australian, cash flow positive for the first time, excluding inventory. And we probably got a little bit of leftover demand from the previous quarter, but like I said, there's a tremendous increase in interest in this area right now, especially with kids at home much more than they used to be because of the pandemic. Parents becoming much more aware of nearsightedness and the importance of treating it. And so we've come into the end of the year here in the middle of a pandemic with half the company that we used to have, and are doing really, really well. And we'll just leave it there for now. And if you want any more information, there's a full slide deck that's been posted to the ASX website today. You get that, and I'm happy to answer as many questions as they give me time for.
Right, thanks, Dr. Stephen. Yeah, so I'll try to, I guess, the questions that are coming through are actually quite similar, so I'll try to phrase them all together. So you mentioned that there's a lot of growing interest from competitors in the market of, I guess, I wouldn't call it childhood myopia, but in terms of the younger demographic. How do you see this affecting VTI? With competitors coming in, would they be able to sort of compete in terms of an economies of scale perspective? And what's the cost difference between normal contact lenses and yours, or your competitors' contact lenses and yours?
So at this point, large competitors coming into the space is just fantastic for us. Okay. We are a very small company. We've been out there talking about this myopia issue for a while, but at peak, we had 25 sales professionals in the company. That is less than 10% of what the typical large company has. So a company like CooperVision, which recently did get a product approved in the United States, we're seeing an immediate benefit of that because of the money that they're spending on educating parents, educating practitioners, and around the world for that matter. They're a global company. Their product is available around the world. And we've actually welcomed that participation from another company. Now, the other companies are pretty far away from having products that they can put into the space. They're investing in new products. They're developing new products. You see Bausch just going out and buying the products that they're going to need to attack this myopia space. You see Menicon partnering with us. So there's a lot happening in the business development realm right now, which of course also has the potential to help us. But just seeing the large companies at least starting to talk about these issues is having a direct impact on us because we're already on the market. We're on sale in 11 countries right now. We're just getting started. And to have those really loud voices out there talking about these issues really helps us a lot because, to be honest, we, being a company as small as us, we couldn't possibly have put that much behind the message.
Right. And are there any opportunities for, I guess, licensing out your already approved product, since you guys are a bit of a first mover?
So we've done that with Menicon already. That was our first strategic deal. We've licensed to them the product. We actually manufacture it for them, put it into their packaging. They go out and sell it. And that is a very intentionally designed deal that's non-exclusive, it's cancelable, and it's assignable. And what all that means is that if somebody else approaches us, we'll be able to license it to other parties as well, or be able to license it to somebody else exclusively. There's a lot that we can do with it. And, as we've said in our public statements, business development is a constant part of our strategic goals. And, with everything that's happening in myopia right now, one could expect that that would be busy.
Is there a strategy to steer people away from permanent glasses to disposable contact lenses? And how much more, I guess, does it cost the consumer on an annual basis?
Well, the first thing to recognize is that for the pediatric population, just regular spectacles correct the vision, but do not keep the child from getting worse. So of course, any company making a product that they believe to be therapeutic for the child, therapeutic in a sense that it'll keep the kid from getting worse, in addition to correcting their vision, we're really going to push and advocate for that. Because again, the important thing here is to keep them, you know, you have to correct their vision. They really need to be able to see, but it's also really important that we minimize the progression through childhood. So yeah, I think, you know, just comparing these to regular glasses in a kid, we would strongly advocate some sort of intervention that would, you know, keep the kid from getting worse.
Excellent. No, yeah, we managed to get through all the questions. So thanks for that, Dr. Stephen. And you know, I think there's definitely a lot of interest and engagement from today's participants. So if anyone would like to, you know, take a longer meeting with Dr. Stephen and VTI, feel free to reach out, and we'd be happy to facilitate that.
Thank you very much, everybody, for your attention, and I hope to hear from you.
Excellent. So on the line, next up, we've got, last but not least, actually, we've got New Zealand Coastal Seafoods and their CEO on the line, Andrew Peti. It's a very unique product that they're involved in called ling mo, or fish bladder. If you're not from China, it's a very popular delicacy there. But they're also involved in the nutraceutical space that's been getting a lot of attention lately, given the current geopolitics in Asia. Given the current geopolitics in Asia, there could be quite an interesting demand-supply imbalance in the region. So Andrew, it's good to have you with us today. How are you?
Tim. Yeah, I'm very good, thank you. Appreciate the intro.
Yeah. So were you planning to use a PowerPoint presentation today, or were you just
Yeah. What I've done is I've just doctored a PowerPoint presentation that we used for our AGM recently, earlier on this week. So I'll share the screen now and bring that up.
Great. Looks like you've got a massive screen in front of you, Andrew.
Is it? Yeah. I'll just try and share this now.
And I'll give you confirmation once that comes up.
Hey, how's that? Does that come up now, or no? We're still.
No, not yet. We're not seeing it yet. Would we be looking at the file that you put up on the ASX yesterday?
Yeah, that's right.
Okay, I can share that from my end if you'd like.
Okay. Yep, that'll be good.
Yeah, and then just let me know when to sort of jump over. Bear with me. Here we go.
Excellent. Thank you.
Can you see it?
Yep.
Perfect.
Yep. So if we could just go to the next slide, and maybe I talk a little bit about our background with the organisation.
Sure.
No, not so much that one. I think we were looking at our brand. Yeah, we could probably just leave it there for now.
Okay.
I can talk a little bit about our background. So the organisation itself started off as a private organisation back in late 2016. And at that point in time, the organisation was predominantly producing the dried ling mao that you can see in the centre of that shot. As Tim's pointed out, it's an Asian delicacy. It's very rich in collagen, and it's been used for quite a few thousand and consumed quite a few thousands of years, particularly in the southern China region, parts of Hong Kong, and right throughout Asia. So it's reasonably well known as a delicacy and as a highly valued product itself. fast forward through to June or July of last year, the company went into and started looking at a float for the organisation, and it was decided that they wanted to float on the ASX at that time. And I guess the key driver for that was being able to access capital so that we could start expanding our market and expanding our product offering, as well as looking to go into larger premises where we could actually produce more product. So the company successfully floated in August of last year, and then following that, we were then appointed as a senior management team, myself included, from about September through to November. And then since then, not only have we started to produce our own dried Lingmao on a new export RMP certified site, but we're also producing, and I guess we identified the opportunity to branch out not only in the dried goods that we were doing, but also going into nutraceutical. And so far, so that's worked out very well for us. So I might get you to jump into the next slide and we'll see what we can see here. Okay.
Can you see that, Andrew?
Yeah. So we've actually jumped a few slides here, but basically the slide that we're looking at now talks about what it is that we're actually trying to achieve now that we've set ourselves up and started to produce products, not only for food consumption, but also for nutraceutical. And in addition to that, some of the FMCG products, which you can see to my front here, if you can still see me, with our own branded product. But we've got some pretty hefty targets now we're looking to pursue going into this current financial year. And one of those, as we've addressed at the top there, is the high value purchase agreements that we're moving in towards. And I guess if I use a significant one that we pulled up a few months ago, which was a purchase agreement for the distribution of muscle powder, defatted muscle powder and oils that are extracted from mussels with an organisation called Dr. Beer up in the EU. And we're now looking to replicate that with other markets around the globe as well. And currently we're in discussions with probably 3 or 4 quite significant players throughout North America, other parts of Asia, and including into China as we speak. So that's quite exciting for us, and that's something that we'll try and close out this current financial year that we're sitting in at this point in time. We've also put a bit of effort into product development through the, I guess, off the back of the muscle powder. We've also identified Lingmao powder is very high in collagen, for example, and although it's consumed and eaten in Asia, we've also worked out a way in which we can extract and produce powder from this particular product. So we think the Lingmao powder collagen is also a product of significance, and with that we're also working at the same time on marine collagen, which is fish skin powder, probably not so rich in collagen as is the Lingmao, but it's certainly something that's very valued. In particular, in the Western regions, we're finding there's huge demand for marine collagen, and in particular here in New Zealand and in Australia, we're getting really good response from clients who are looking to and would like to uptake some significant volumes from us when we do go into producing this in more commercial quantities, I guess, in the upcoming months ahead. With that, we've also looked at additional acquisitions, and we think that's going to assist our growth and I guess accelerate our plans and projections in terms of what we're trying to do at the moment. So we completed an acquisition earlier on this year for Kiwi Dreams International, which was a nutraceutical organisation that we were able to gain immediate access to market and take some of the products that were with KDI at that point in time to market directly ourselves. And they've also, we've kept the managing director on in a consultancy point of view for the organisation. He's been really helpful with some of the product development plans that we've put in place, and also assisting us with talking to potential and introducing us to potential clients. So I see going forward into this financial year, we're looking to maintain that. So we're currently looking at a number of acquisitions whereby not only do we look at what complementary products does the organisation possess that we may want to acquire and take to market, but in addition to that, what contacts do these businesses have that we can leverage from as well? So not only are we purchasing and taking on maybe complementary products that we want to take to market ourselves, but also can we engage with them and leverage from them and their contacts so that we can further sell products into other markets that we may not be operating in at the moment. With that, I guess plant and equipment and upgrades, certainly part of the upgrade that we completed over in the last 6 months, 6 to 9 months, sorry, was the new export facility that we set up in New Zealand, and that's located down in the South Island of Christchurch, which is an export facility which basically allows us to quadruple production as we know it, and subject to uptake, we'll look to grow our team and grow the types of plants and equipment that we need in order to extract more volume, but also do it in a more efficient manner that we can take to market. So we've worked through quite a few design and feasibility assessments over the last 6 to 9 months. And depending on uptake and the completion of our business case that we put to our board, hopefully in the next few months ahead, and certainly this upcoming financial year, we're looking to acquire some key pieces of equipment that will enable us to do that as well. And then finally, online sales platforms. I guess the key one for us is we're wanting to utilize technology in order to increase our sales and increase our penetration into markets as well. So whether that's using our own online platform, or do we partner and then look to engage and use the likes of a Alibaba with a trade partner, and or Amazon if we're looking into North America and the like. And all of these platforms we've been looking at quite carefully over the last 5 to 6 months. We think when the timing's right, there'll be a good business plan and a good business case to actually sign on with these platforms and look to start distributing our products through there, as well as direct engagement with clients and markets ourselves. Go to the next slide, please, Tim. Okay, and the team basically that's delivering at the moment, myself as the Chief Executive, I've been with the company since September of last year, so just over 1 year now, 1 year and 2 months with the organisation. Initially, when I was taking on, I was appointed as the Chief Operating Officer, and then stepped up into the interim Chief Executive role in March of this year, and then was appointed into the full-time position of CEO effective mid-July. And so with that, we've also managed to retain one of our key managers as our general manager of business development now, Peter Wynn, whom I assumed the role from, and we've kept Peter on. He's very good at identifying new business opportunities for the organisation, and we're going to retain that. And likewise, up on the screen, you can see some of our other key directors that basically provide the guidance to the organisation, including Aldo Miccio, who was also another co-founder of the business from the beginning back in 2016, and Aldo has been retained as one of our executive directors for the organisation. And certainly his guidance and advice is very important, and I think he'll contribute a lot to the success of the organisation going forward. So I think that's about it really in general in terms of who we are and what we do. We're open to questions and the like, and appreciate people's time.
Yeah, awesome. Thanks, Andrew. A couple of questions came in from Jim. He asked, in order, can you share the status of orders with Toyo and the Hong Kong client per the October 2020 update, and the status of the orders with international expansion?
Yep. So Toyon, the discussions are ongoing. We have supplied samples for Toyon to work through in terms of the onboarding process and the assessment process that they take before they look to sign on, I guess, with suppliers such as ourselves. But so far things are positive. I don't have a definitive time frame to close out and sign on for the potential purchase agreement that we would like to obtain with them. But what I can say is things are looking positive to date. As far as the Hong Kong purchaser goes, again, very successful. We've had ongoing orders from the large Hong Kong buyer, and at this stage we're continuing to supply that particular organisation right through into and including, we hope it's going to be a long-term relationship with them. Whether or not we get to a purchase agreement, time will tell with those guys, but they're happy with the commercial terms and the supply that we've been providing to date, and we think it looks quite positive.
Right. And I think you briefly touched on this before about partnerships with other leading companies globally, but are you able to comment on the discussions with these other companies? Are they, as in terms of sales, I guess, are they early stages or already further along in it?
So when you say partnerships, I'm assuming it's with our distributor partners that we're looking to work on. So yeah, look, I mean, if you look at the duration and the time that we've operated since we've floated, it's still early days. And the good news is we are in discussions with other people that are really keen to partner up with us, take our product to market and work together. One thing I will say as well is, although we've announced minimums with certain partners that we work with, I think some of those products are only the initial products that we'll look to work with these partners with. And the good thing about it is, I think going forward, there's going to be a whole lot of other offerings that we're able to produce and we're able to manufacture and then take to market. So I think what we've done is we've established a good pipeline to start with, and we want to grow that pipeline with those partners. So it's not just going to be, some of the products that we have listed in the contract that we've obtained so far, but we want to grow on that and develop more products and work that pipeline in time to come. So yeah, look, it is early days, and we admit we haven't been here that long and operating the way that we do, but I think the potential's there to ratchet up things quite quickly in terms of the overall volume and the mix of products that we can take to partners in a global sense. And so that started obviously up in the EU with one of the distribution contracts that we announced earlier on this year. We've also got a distributor and supply contract here in New Zealand. Likewise, we have dried products that we're currently supplying already into a lot of Asia, and we just want to grow on that.
Yeah, no, and I think our next question is about something in the pipeline as well. It's regarding the oil extraction, and what are your plans for sort of implementing the oil extraction machine that was mentioned in the September SPP?
That's right. So we've recently completed the design feasibility assessments for the oil extraction machine, and we've got a good feel for infrastructural requirements around that we need to ensure that we've got. So I guess for us now, it's just the completion of the business case that supports that particular piece of work that's done, and then making a call on that with our board. So I don't think we're too far away from making the call on that. There's been some really good background work that's gone into it, and yeah, look, it's an item of equipment I think that's quite exciting and will provide more opportunity, I guess, to extract more value in the products that we produce. So once we've completed the business case and we're happy with where that stands, I guess we'll be in a position to implement quite quickly.
Great. Well, thanks, Andrew. I think we'll wrap it up there.
Right.
And yeah, if anybody here has any other questions, I think New Zealand Coastal Seafoods, you guys are doing a round of roadshows with us today and in the coming weeks. So sign up for that, you know. But thanks for today, Andrew.
Right. Thank you very much. Look forward to receiving questions if and when we receive them. So thanks for everyone's time today.
Yep, Andrew, we'll catch you in the next one.
Yes.
And thank you to all the rest of our speakers today. You know, excellent presentations all around. And to everyone who attended, thank you for tuning in. Just to reiterate, you know, if you're interested in any of the corporates that presented today, feel free to reach out to me. And I'd be happy to organize a longer meeting or even, you know, something face-to-face if possible. Our next webinar coming up is on Friday for Dots Nano. They're a high-tech carbon quantum dots manufacturer with applications focused in authenticating PPE, which is a whole new market. So if you're interested, I'll send out a link in the chat. I'll leave my contact details up, but I hope you got something out of today, and we'll see you in the next one.